Yo, what's good, guys? How are we this evening? Okay, let's make it short and sweet, guys. Tonight's video is talking about the 5 and the 13 EMA and how you can use these two moving averages to trade crypto. Okay, now let's get a bit of housekeeping done. If you are new to the channel, be sure to like and subscribe. And all my pattern watchers, let's have a conversation, man. Let's go. So, 5 and the 13 EMA. Now, let's understand what we're talking about here. The EMAs. EMA is an acronym for Exponential Moving Average. Okay, now if you really want to find out more about what a moving average is, it's just the distance and the journey that price travels before it comes back into the mean or the normal zone that price behaves at. Okay, now I'm not going to dive too deep into the dynamics of exactly what is a moving average. Google can help you do that. But in tonight's video, we're going to talk about how we can really capitalize on understanding the relationship between these two moving averages, okay, and how we can extract profit by understanding the behavior from these two moving averages in relation to the candlesticks, okay? So, looking at the chart, you can see we've got the 15-minute time frame on Bitcoin Perpetual, okay? I need to bring it back to the hourly to keep it right and consistent. So, here we go. The 5 is the yellow line, and the 13 is the red line. Now, these are the two moving averages that we do place a lot of focus on the streams. Okay, we understand how, in order to work out whether to take profit or to determine an exit on a losing trade or a profitable trade, we need to understand the relationship between these two moving averages. Now, with moving averages, okay, there is a common theme. Every time you see price deviate away from the moving averages, it implies volatility. It's moving away from the norm, okay? Now, if there's something that you want to understand about moving averages in a more of a deeper concept, or should I say a mathematical aspect, you might want to explore mean reversion. Okay, now this is the phenomena of where price moves away from one point and it always ends up coming back into the mean. Now, whatever mean it is that you decide to trade from, okay, you can see how price comes back to the 5 EMA right there. It comes back to the 13 and it comes back to the 50 as well. And you'll also see on higher moving averages as such, you can see it's come back to the 5, come back to the 13, it's come back to the 50, it's gone back to the 200. And in some instances, we do see price come back towards the 800 EMA in some instances, which you can see just shy of right here as well. You can see that how it's come back towards that zone right there. All right. But tonight's video is just going to help you try and understand the relationship between the 5 and the 13 EMA and why these two moving averages really do give you the story as to what may be happening next with price. Okay. And moving forward from that, I'll be doing another video which talks about the 50 and the 200. Okay. So let's get straight into it. So, the 5 and the 13. A common rule of thumb is this. If price is above the 5 and the 13 and the 50 EMA, you will only be considering going long. Likewise, if price is below the 5 and the 13 and the 50, you would consider going short. Now, I'm going to focus a little bit more on the 5 and the 13 EMA. Now, a lot of people have asked me questions and they've said, look, Tino, I'm in a profit. You know, how will I know to get out? You know, what point do I take a profit? And I always say to them, look at what the 5 and the 13 EMA are doing. So here's a hypothetical scenario. All right. Say you entered long right here. Okay. So price is above the 50 EMA. It's above the 5 and above the 13. You're riding this long. It's going up. It's going up. Okay. You get this one big push to the upside. All right, you're now thinking, is it going to continue to go higher? You know, what point do I consider starting to close my trade? Well, we need to understand something. What has price done? The first alarm bell is price has expanded away from the moving averages, even the 5 and the 13, let alone the 50. So we know volatility has come into this move. So we understand that at some point they need to bring it back into the fray. Now, without diving into too much detail about why price really needs to come back into the zone and why it's come back and recovered the green vector candle, okay, just solely on the 5 and the 13 EMA, okay, the market makers need to bring price back into a zone which can trigger interest again. Now, if you're the trader that's trying to work out whether you should close your profitable trade or your losing trade, okay, let's look at a profitable trade. Say you did go long and you caught this move to the upside and you are in this zone right here. What are you waiting for? You're waiting for price to close below the 5 and the 13 EMA, but also you're waiting for them to cross over. Look, you can see right there that the 5 and the 13 EMA have crossed over. Now, this is the issue. The crossover would have happened at the close of this candle. So what do? Are you going to leave the profit that you had up here and wait until the 5 and 13 cross over? Well, we're on the hour time frame, ladies and gentlemen. So let's drop down the time frame. Let's go to the 15-minute time frame. What can we see? Well, we can see the 5 and the 13 AM are pretty stagnated. Coupled with the understanding of the vector candles, you can see that this was a stop hunt rise. The green vector candle failed to close at the highest point, and the next red candle after it didn't show any confirmation of a follow through. The crossover happened here. And that's on the 15-minute time frame. Now just look at the difference. If I mark off the crossover there, okay, and then go back to the hourly and look at the crossover on there, it's bright as day, isn't it? The difference between seeing it on a lower time frame, so the 15-minute time frame, which is a quarter of the time of an hour, and then you've got the hourly crossover. All right? Now, this is where it can get a little bit tricky. If you're in the belief that price is going to continue higher from this point, do you decide to hold your trade? And when it pulls back to a moving average, anticipate another move to the upside, so you're going to add to your position from here? Now, if you were lucky enough and you're able to do it from here, then fine. Okay? But where price is right now, it has been rising for quite some time, and it hasn't, well, it did show a clear break to the upside, but it looks like now that we've formed this M formation and price aggressively comes down. So it's like the market makers are effectively saying, right, we need to get a quick dump and build some more longs at the lowest possible point, at the highest point in the chart, so that we can get an opportunity to move price higher again. Now, it is the weekend, so things are a little bit chaotic. All right? But you can see the difference between the 5 and the 13 EMA on the hourly on a take profit and the 5 and 13 EMA on the 15-minute time frame. Okay, so that's one of the factors with the 5 and the 13 EMA. If you're looking to take a profit off the basis of these moving averages, consider what the 15-minute time frame is doing after you've consulted what the 1 hour time frame has done. Okay? Always keep an eye on the 15-minute, because the crap thing is, guys, this is on the basis of hindsight. Okay? When you're dealing with it in real time, how can you really understand whether or not price is going to cross over the moving averages or not? Well, let's look at it like this. Look what's happened now. The 5 and the 13 EMA have now crossed over to the downside. Price is now below the 50 EMA. The 13 EMA's crossed over the 50 EMA, and that also has happened on the 1 hour time frame. Price is working, the 13 EMA is working on crossing over the hourly. Is the trend to the upside over? Is momentum building to go down lower? We will only know once the 13 EMA crosses over the 1 hour 50 EMA. Okay? This is a fast move. Okay? So don't get fooled by it. The market makers may be trapping traders to going short. They've already recovered the longs liquidation points from this candle right here. We've also got this candle right here as well. Look at this. We've got this zone right here. Could the market makers bring price back down again? Could they bring it back down to the 200 EMA before they then decide to make another move back up? Look at where they're marking up price. Look at how they're getting busy towards the 50K zone. Yeah? 50K's up here, guys. They're trying to get their orders, as many of those orders below the key 50K mark. Because once we get to that point, we'll be approaching all-time highs near enough with Bitcoin. And it's not too far away. It's only 64, 65. Okay? Use the 1 hour 5 and 13 EMA to determine the direction of momentum. Once the 13 EMA crosses over the 50 on the 1 hour to the downside, everything is looking to go down lower. But what are you waiting for to finalize that intention? You are waiting for a retest continuation. That is critical into applying the 5 and the 13 EMA crossover. Wait for the retest of that zone. Look at this. Look what happened here. Okay? If I zoom in, you will see it. Price comes down, crosses over the 50 EMA. Yeah? 13 and the 5 are pointing downwards. All right? Then you see price stabilize. Price then comes back up, touches the 5 and the 13 and the 50, and then pulls straight back down again. If we consider what actually just happened, you've got it. Up, retrace, continuation to the downside. All right? Now, the reason why I didn't use this zone is because the 5 and the 13 EMA was still above was still above the 50. It's when it goes below the 50 and then the 5 and the 13 EMA in terms of price. When it's below it, you then consider the retrace back up towards the moving average. So you're looking for the 5 and the 13 EMA to break down. Once they break below the 50 EMA, momentum is favoring lower prices. Once it starts to make an aggressive move away from the 5 and the 13 EMA, expect a retrace back to the 50 at some point to seal the intention that the 13 EMA crossing over the 50. You want confirmation of that. And that confirmation is right here where price reverses back up to the 50 and then drops lower. All right? Let me say that again. In order to establish momentum to the downside, wait for the 13 EMA to cross over the 50 EMA to the downside. When the 13 and the 5 expand after they've crossed over the 50, wait for the first retrace back towards the 50 EMA to determine if the momentum to the downside is favorable. Price drops, comes back up, and then it drops down lower. Now, this is where it gets a bit interesting. How can we exploit the 5 and the 13 EMA's behavior to establish an entry to the upside? Well, first things first. Look at the distance between price right in this zone, okay, and the 50 EMA. If you want to see this discussion in real time, go and watch the last 2 streams because we were talking about this area. All right? One of the streams happened during the day at 2 p.m. on a Thursday, and then we did a stream on the Friday night talking about the success of this move. Okay? So the first criteria is we are expecting price to come back towards the 50 EMA. Once it stabilizes after it's making its move to the downside, the 5 and the 13 EMA are expanded. You can see the volatility between them. They are so wide. The 50 is very wide between these two moving averages as well. So we're expecting a pullback. What are we looking for? Well, we're looking for price to stabilize. Look what happened. You've got a W formation on the 5 EMA. If you look down on the RSI itself, you can see a W formation on the RSI. Outside the volatility band, back inside the volatility band. So you've got yourself weakness on the move to the downside. All right? Once the 5 crosses over the 13 EMA, that's when you need to start paying attention. Then, if the 13 EMA manages to cross over the 50 EMA, momentum is favoring higher prices. So there is the crossover right there. Okay? Now, go down to the 15-minute time frame. Okay? And just look at what was going on there. Let's go back. So, How soon did the 13 EMA cross over the 50? Well, look at it. 2 shark fins at the lows of the 5 EMA. The 5 crosses over the 13. Things are starting to change. Big blue vector candle crosses and closes above the 5 and the 13 EMA. You're paying attention. Price then comes up and comes towards the 50 EMA. The 5 and the 13 are starting to expand. You would either wait until the 5 and the 13 crossed over the 50, because look, the 5 would cross over the 50 first, and then the 13 would follow. So your entry would be here. Now look at it. The 5 and the 13 EMA are starting to expand. Now we've got momentum to the upside. Price starts to rise up. Now, the interesting part is, when price has moved away from the 5 and the 13 EMA, when it comes back down towards it, wait until the 50 EMA has been breached with price. Okay? Because once it gets breached with price, the 5 and the 13 EMA will follow. Okay? But until price comes back to the 50 EMA and it stays within the 5 and the 13 EMA, the volatility between the two moving averages, if it stays within those zones, you've still got a favorable move to the upside. Just pay attention to how price behaves around the 5 and the 13 EMA. Just look at it. It pins it, man. Could I get any more? Look at that. It pins it. Bang, shifts away from the zone. Now look, expansion. Things are going to start to change because it hasn't even touched the 13 EMA. If you go and study Ethereum's move from when it broke out of the 1800 zone and then it continued all the way up and towards the 4,500-5,000 mark, we were riding that 13 EMA as if it was the 50 EMA. It was unbelievable to see. Look at this. Look at how the 5 and the 13 EMA, price comes back down. It goes below the 5 and the 13 EMA. It doesn't come anywhere near the 50. So things are still favorable to the upside. Okay? Naturally, we are expecting them to bring price back down towards the moving average because of how extended this move is. They don't do it. So you're asking me, well, how would you know to close a profitable trade in this zone? You would look at the vector candles. But just also pay attention to the 5 and the 13 EMA. Has the 5 crossed over the 13 EMA? No. Because if you were sat in all of this, you would have seen how the 5 was coming down and the 13 was coming down. And then this next candle spiked back up, which leveled off the 5 and the 13 EMA. Then the next candle followed through and pushed price higher. And then the 5 and the 13 edged upwards. So there was no reason to consider closing the trade at this point because nothing had happened. Now that we've had price move to the upside here, it starts to pull back. 5 crosses over the 13, price is below the 13 and the 5, okay? It's coming down towards the 50, but it doesn't take it. So you would have probably taken a bit of profit there. But look, this time, it did cross over, okay? But the 13 formed a shark fin. Look on the RSI itself. You will see it's outside the volatility band. We expect price or the RSI to come back into the volatility band at some point. Look, shark fin on the volatility band. You expect it to come back in at some point. Expect. This game is about probabilities, guys. Okay? You have an expectation of price. It's likely or it's not likely. This is the name of the game. All right? Price then comes back up. 5 and 13 EMA cross over again. But just look at the behavior. It's just tricky behavior. Okay? Expansion of the 5 and the 13 EMA. They break down again. They don't hit the 50. Until the 5 and the 13 violate the 50, there's no reason to close your long. Because look what you would have managed to capitalize on. This bad boy to the upside. Okay? Now look at where we are. Let me zoom out. Here we go. 5 has crossed over the 13 EMA. It's dropped. Price is below. It needs to come back into the 5 to the 50 EMA on the 15-minute time frame. Look what the RSI, look at the 5 and the 13 EMA doing. The 5 has crossed over the 13. It's now trading above. Now, it is Friday. It is Saturday. It's the weekend. So we don't normally tend to see decent price action. We get these spike up movements up and down. But you don't want to get caught up in trading the moving averages on the weekends, okay? Unless you are catching certain moves, all right? Everything now is flat across the board, okay? So I hope this video has brought some light into understanding how to trade the 5 and the 13 EMA. Or should I say, certain things that you need to look for when you are trading with the 5 and the 13 EMA. Now remember guys, these two moving averages are part of the hybrid system. The hybrid system is a concoction of so many more things that are required just before you decide to make an entry, okay? There are so many things that need to be considered. You can't just simply trade holistically off the 5 and the 13 EMA because you'll get thrown out in many instances, okay? Look what happened here. You could go long on the 5 and the 13 EMA expanding. You go long here, but then you would get stopped out straight away because of this big red vector candle. All right? It's all about building the story of confluences. Look how we threw the RSI into the mix as well. All right? Moving forward, ladies and gentlemen, I'm going to be doing more of these videos to help you guys understand segments of the actual hybrid system itself, so that you can come back to these videos if you need a refresher, so that you can understand what things need to be applied, okay, in confluence to each other before you place the trade. Okay? Guys, go and have yourself a wonderful weekend. If you are new to the channel, be sure to like and subscribe, okay? And I'll catch you guys in the streams. Take care of yourselves. Peace.